Morning, this is Market Movers for Tuesday, November 26th, 2013. Not a whole lot of data today. We had actually housing permits up 6.2%. It's a 5-year high for permits, annualized rate of 1.03 million units. Interestingly, though, if you break it down, there was a 17% increase in multifamily units, dwellings with 5 or more units, while single-family homes rose less than 1%. So although the overall permit number was really strong, if you kind of break it down, depends on what segment you're looking at. Again, multifamily is where the real strength was, and the strength was mostly in the south and the west, not on the east. So if you're out on the west coast, that's a good thing. If you're in the multi-dwelling area, we have permits and we have pending home sales, and then we have actual existing home sales and new home sales. So there's a lot of data that comes in. Permits are when the permit is pulled for a specific project, but they haven't broken ground yet on the building of the unit. So permits are a good early indicator of future activity. So a 5-year high on the number overall looks really good, but again, leaning more towards the multi-unit dwellings rather than single-family home. So depending on which segment you're interested in, that gives you an idea of where the market is and whether it's helping you or hurting you or whether it matters at all. And then we also had home prices. The Case-Shiller Index came out up 13.3% year over year, up about 0.6% for the month. This is October. Good number there as well, but it's not really helping the stock market all that much. We're kind of mixed. Dow up about 16. The other two indexes, NASDAQ and S&P 500, pretty much flat. So not a whole lot of activity, not tons of economic data. We're pretty much at the end of earnings season, so we don't have to worry too much about that until January. So things are kind of business as usual today. Trading above 16,000 on the Dow, trading above 1,800 on the S&P 500, and almost above 4,000 on the NASDAQ. So we'll keep an eye on the NASDAQ and see how things go. One interesting note, if you look at valuations, I'm always kind of comparing historical numbers with where we are today. We're at about a 19 price earnings ratio for the S&P 500. If you look back 13 years ago, the last time the NASDAQ surpassed the 4,000 level when we were getting into the tech bubble, the PE ratio on the S&P 500 was 29. Again, it's 19 right now, 19.1. So at least from some of the metrics like that, if you're concerned about valuation, we're certainly not seeing the excesses in the overall market anyway, at least if you look at the S&P 500 as we were back when we hit the tech bubble back in 2000, and obviously the market crashed pretty hard right after that. So at least if you look at valuations from or you look at GDP growth on a global basis, I've talked about this before, global GDP is probably 30% higher today than it was at the peak of the markets in 2007 and the peak of the global economy as well before we had the Great Recession. So at least on a global productivity basis, you could make an argument that the stock market's really not all that overvalued, even though the peak of the S&P 500 back in 2007 was 1565. If you look at the closing high, and we're above 1800 right now. If you add 30% on top of the 1565. You're looking at more like 500 points more, so that would put us above 2,000 on the S&P, and we're only at 1,800. So again, you can always make these arguments, but it's all sort of academic. The market's going to do what the market's going to do. So, and the market never really typically goes straight up or straight down. There are always corrections in a bull market, and there are always rallies in a bear market. So anyway, that's where we are today. We'll keep an eye on things and see how market trading develops throughout the morning.